Well, thanks. Congratulations on your purchase. This is Anthony Parent of Parent and Parent, IRS Medic. And congratulations again, because this is a really, really great guide. I think it's going to help you out so much. This has been exciting for me to create because there's so much ignorance and fear that people have, and then there's so many people who are going to prey on your ignorance and fear and get you to do something that really isn't in your best interest. So doing some investigation, you could really learn a tremendous lot. So this is the guide as is when it's fully printed, and I have the same guide online, how to create your own IRS investigation report and save 1 million or more headaches. And I absolutely believe that, and that's me. So this is what we're going to go over, okay, for our investigation. We're going to go over the types of transcripts. The transcripts are how to find out what the IRS is doing to you, what they're saying about you. That's sort of the key to everything. We're going to talk about account transcripts, and those are really the big ones. They really tell you a ton of information. We're also going to go over wage and income transcripts, what they mean, and then a record of account and when you would want to do that. Now, a critical thing is you just don't request one account transcript. The IRS looks at each tax period as a separate account. So if you have 10 years of tax issues you want to do an investigation on, that's 10 different transcripts you would have to request for each type of one. Okay, now let's talk about how to get those transcripts, right? We want to know how to get those, and there's a few different ways. The quickest way, might be the worst way, is to call the IRS. You can actually call the general ACS number, Automated Collections, but I'm going to say don't do this. It will be a little quicker this way because you're not going to have to wait for the IRS to receive your request. But however, what happens is that you alert the IRS to collections, and I could show you some examples of where maybe you don't want to do that. If you do call and you owe money and you're not in some plan or you have a balance, the IRS could say, okay, well, 30 days for you to give us back your proposal, and they might not be doing you a lot of favors when you do that. The other way is if you have a revenue officer assigned to you, you can get them real quick. Just ask your revenue officer for that. But I would also say this is really a situation where you don't want to be handling it yourself. If you have a revenue officer, you have a serious case. You really need to have a representative handle for it. The stakes are high. Revenue officers can be very friendly and very businesslike, but I'll tell you this, that they don't necessarily know all that much about you. And you could be agreeing to something that isn't really feasible for you to pay, relating to another issue down the road. Other issue that we see a lot, we'll get an agreement with the revenue officer, and somewhere during the handoff from what the revenue officer wants the case to be and what the IRS actually codes it off doesn't quite happen. So somebody thinks that they're in this. The revenue officer thinks that their agreement is reached, but according to the IRS, it hasn't. Okay, so let's talk about the ways that I do want you to go about getting your transcripts. One is online. I'm going to give you that link in a second. And it's a good way to do it if you can do it. Now, they take this down time to time due to identity theft. But here's the problem. If you haven't recently filed and you don't have the other documents, you can't get it. So then you have to request them by mail. And so here's the link to it. It actually isn't that bad of a URL. To request those online or by mail, go to https www.irs.gov. Individuals get transcripts. That's pretty good for the government, I would say. So this is the page that you're going to get. So yeah, if you're going to get them online, click here. If you have that, so here we see all the things that are required in order to get it. And it's really the mailing address from your last tax return. Well, if you haven't filed in a while, right, you might not know that. And then they usually ask you for your adjusted gross income from a previous year too. So that's what you're going to need. So that's why you might need to go by mail. The downside with by mail is you're going to have a little bit of a delay, 5 to 10 calendar days. And that's what I would say happens. I would say that's about accurate. And now, let's talk about what these are going to mean. Now, look, I can overwhelm you with what all these transcripts are because you're going to see in a minute how technical they are, but I don't want to do that. What I want to do is help out 95% of the people with tax issues. If you have those really technical things, chances are you already have someone representing you, or you should. So this is really for people who have more simple, straightforward things. I don't want to get down to it. By the way, if you do want to get down into the nitty gritty of what everything means, I did put a 120-page long guide to what every code is on the transcripts. That's in the appendix, and I think if you look at that, you'll see why we're not going to go through all of that. It'll basically make this entire thing useless, and we're really here to help you, give you the most important things you need to know. All right, so what are we going to cover? So in transcript 1, we're going to talk about how to calculate when a debt is going to expire and how to know if a lien has been filed. In transcript 2, we're going to see how to know if you are unfiled. In transcript 3, part A, we're going to show you how to know if the IRS filed a return for you. And part B, we're going to see if that return is, if the IRS filed one for you, and if there's criminal actions going on. Are there any tells to know? Because I actually have a transcript from a client who did go to a facility run by the federal government. It does happen sometimes, and I can explain a little bit more what happened there. In transcript 4, we're going to go over audit, how to know if you have been audited. We've had clients who didn't know they've been audited. Things were kept in the dark for them, so this is a way to know if you've ever been audited. And then also, if the IRS can levy you, that is, levy your wages, your bank accounts, even if you are your vendors, even if they owe you money. In transcript 5, we're going to talk about misapplied money, how to know if the IRS has misapplied money. And then we're going to show an example of why you have to look at all other years, because this client defaulted an offer of compromise but didn't show up. Part 6, this is exciting, and this is really where I think everybody is going to get so much value, because basically it applies nearly in every situation, unless it's something where you cut down your debt drastically with an offer in compromise or bankruptcy. First time penalty abatement. It is pretty awesome. You're going to get your value with this. I'm going to give you such a great example of this. It's just really exciting how it works. I think you're going to love that. Part 7, we're going to go over Chapter 7, how to know if Chapter 7 bankruptcy will work. And we'll also go over when you still have certain appeal rights. Part 8, we're going to talk about wage and income transcripts, what they look like. And those are really good for filing old returns, and actually pretty essential unless you happen to have all your old tax documents, right? But that's not really likely. And then in part 9, we're going to finish up with what a record of account looks like. And those are the transcripts of your tax return. All right, so let's get going. So the IRS has 10 years to collect on a debt from the date of assessment. So let's go, and I don't know if most people know that. The IRS has a limited amount of time. It used to be much quicker. It used to be, I think, 6 years, and I think in 1992 they changed it to 10 years. But so many people are kept in the dark about this, and I think a lot of resolution industries, the people don't want people to know that, because what's the point of hiring them if your debt's going to go away in a few months, right? There's nothing really in it for them, so it's something that a lot of people want you to be ignorant about it, and so does the IRS, right? Because they want you to think you have to pay it when it's going to go away. So it's something by the law, and it makes a lot of sense because these tax debts get out of control so quickly. At least time can cure all ills, if nothing else. So let's go through, and I have actual account transcripts, and I really figured out the best way was just to have my terrible handwriting here, because it just goes a little bit quicker. So here it is. I requested these on January 25th, 2017, right? Here's a tax period, December 31st, 2004. Wait a second. And here's the balance, $24,623.91. Wait a second. How could this possibly be? This tax return was due April 15th, 2005. And if we add the 10 years to that, it's April 15th, 2015. Hey, we're years past this. How could this debt still be hanging around? Well, we're going to show you how. Okay, so here we go. This is where the IRS filed the tax return, but see, they put the substitute filed return, $0. Well, that's not really true. This is sort of how you have to use a little interpretation here to try to deduce what is actually going on. So as we get down to here, this is where we get to the complicated thing. So we get the additional tax assessed by examination. Still, no money there. No money? It's like, are you kidding? I think there is somewhere, right? Then we have bankruptcy or legal action filed. Well, that's a lie. This client never filed bankruptcy. It's other legal action, which was some appeal right the client did before they hired us. And now we get to this. Closed examination of tax return, okay? There's our date, 8/25. Okay, $0. So that's not really helping me out. I need to know the date the tax was assessed because that's when our clock begins to run. So where I find it, because here we have additional tax assessed by examination, there's the money, but there's no date. It's just this. This is not the date. I have to go find the date down here at this other code, 290, additional tax assessed, 6/1/2009, right? So look how long it took the IRS to finally assess it. So what my point is, the clock just started running on that 10-year statute that I talked about on June 1st, 2009, many years after the tax was originally due. So she's got at least until, if everything goes and nothing changes, it's not going to expire to June 1st, 2019. That's really where some delaying things can really harm you in this case. And then in this case, I recall the client wanted to file an offer in compromise, and it was something we didn't recommend. We said, I don't think it's going to work. It's really a stretch. When we recommend an offer in compromise, our success rate is pretty much 100%. When a client wants to do one, there are situations where we'll just refuse, and other times we'll say it doesn't really stand a great chance. We'll do it anyway, letting the client know the risk, because here's the risk, okay? So here's the payments going in of $400 a month. Well, those are partial payments towards that offer in compromise, much better than paying that 20% down payment, right? But that's going to the debt. So it's like, well, what's the harm? Paying $400 towards the debt. So it's going down here. Now here is a credit transferred in from another year. That was probably a refund, okay? And here's a removed installment agreement because we're in an offer in compromise, right? Well, here you see all the payments coming in on the offer in compromise, right? Offer in compromise. Here is a lien on line, here's 582, lien placed on assets due to balance owed. Oh, that's so nice, right? Then they're adding fees and other collections for expenses, 106. Now here's a lien filed. That was weird, right? Lien placed on assets due to balance owed. Now the issued the notice of lien, which is two sort of separate things, giving rights to collection due process. So what they do is they file the lien first, and they say, hey, if you don't like it, you can file these appeal rights. So that's really not all that nice, is it? Anyway, the offer is still pending. We're paying our payments. Here it is. The offer in compromise was denied. The clock now. That offer in compromise was denied, so our clock starts ticking. So we had just a few months before that offer in compromise was going until the clock went. Now it starts going again. So this is, our original idea with the client was to have them into a partial payment installment agreement. So eventually, down here, you're going to start seeing this installment agreement established, right? This is where we have this client start paying $115 a month, less than the $400 of the offer in compromise. So $115, there it is. And then here's a nice little thing. You'll see the IRS screw up every now and then, right? They put a civil penalty on here. This is no. That's completely wrong. They put it on, they take it off. So that happens a bunch of times. So here you go, payments. Here it is, refunds coming in. This is where we try to tell people, hey, you might want to make sure you're not over withholding on certain years, or it could have just been a refund coming of a return that was filed. That's actually, I think, what it was. Unfortunately, when you are doing that, it is going to go towards your debt, which I guess isn't the worst thing in the world, right? So here it is, just a record of all the payments. Awesome, right? Because we're moving the clock. 115, another balance coming in, that looks like a refund coming in from 13. Moving the clock, getting there. Look at this. Yeah, that clock's moving. So here we are at the end, or basically the last payment that this transcript shows up of 115 on 12/6/2016. So now this is my point here, is that if the client sort of knew the best thing to do immediately, that she could have gotten in and filed her tax returns correctly. She could have gotten into a partial payment installment agreement, and it basically would have been about 108 months she would have been paying that, because you're pretty much 9 years. And at $115 a month, that'd be $12,240. And by the way, if she did that from the beginning, this debt would have been gone. She would have been goodbye IRS. But as it is now, client delayed, went for the offer and compromise. We really she didn't think she should have. There was also that delay in assessment. So right now, she still has about 4 years left on the collection date. So she'll be making those $115 a month. Now, if things do improve for her, the IRS gets wind of that. They're going to look for a little bit of money. So that's the upside about doing an offer and compromise. Once you settle it, it's going to stay the same. So that's a pretty exciting thing there. And I think I have a friend calling me right now. They're telling me what a great job I'm doing. Right? So how to know. Now we're going to go. The next transcript is going to be how to know if you are unfiled. Okay. Here we go. Here's another account transcript. Okay. Account balance, $50,000. Oh, that's nice. Hey, they owe me money. Well, there's a reason why. No return filed. And here's the $50,000 payment. So that's basically it on that one. Okay. Now, how to know if the IRS filed a tax return for you is the first part. Then the second part is sort of when criminal actions are going on, if there's anything in the account transcript that can tell us. Okay, so here's the same thing. We're going to see in this, the IRS is looking, there's no return filed, right? And then the IRS says, substitute tax return prepared by IRS. And you got to love this because it's $0. All right, cool. No taxes I owe, right? But, you know, I think you're learning by now that these transcripts require a little bit of deduction and trying to figure out what it can't be, because obviously that can't be true because the amount here is 0, right? And well, actually it's 0 here, adjusted gross income. So what happened here? How did we have this occur? Well, let's take a look. So here it is. Now look at the date on here, 7/7/2008. Well, that's after all of these things. So they filed an extension for their return, and the extension looks like it was late, so that's really not going to work. Now here the IRS is inquiries for filing non-tax returns. That's them sending out a notice to say, hey, notice you didn't file a tax return. You might want to do it, or we'll do it for you. Okay. And as we go down to the next page, additional action pending. Now here it comes. There it is. Additional tax assessed. So it actually wasn't all that much. This is where the IRS actually assessed it through the SFR. $4,000. So the IRS assessed $4,376. The person already withheld this. So guess what? There's actually a refund. Unfortunately, the check doesn't go to the client because they owed money on another year. And so it was transferred out to that other account. Now, I'll tell you, people get really concerned about criminal charges, right? I mean, who wouldn't be? It's pretty crazy what could happen. So this is a case, this is a really unfortunate case, because it's something where if this client came to me and he was lied to by somebody, he was lied to by a bunch of people, and but he admits his own responsibility in this. He kind of wanted to believe what he wanted to believe, but there was a point at which he wanted to correct this, and he was totally lied to by someone, I think, posing as an attorney, because I would not call them an attorney. So here's his return, his account balance here, and I want to go through sort of what was going on. This is a guy who did one of those tax protester things. And there's a lot of these tax protesters love to comment on my videos to say, hey, you don't have to pay your income taxes for whatever reason. And I explain, like, look, man, I am not a fan of the IRS at all. I'm not. I don't think it's the right thing to do. I think it's all terrible. I really wish it went away. When you have a tax system that is based on what you make, that's sort of theft, man. And just because a majority of people like it doesn't undo the theft. So I'm completely against it, but at the same point, I acknowledge what reality is. And I don't care what the Constitution says. I don't care what the statutes say. I don't care what amendment was or wasn't passed. The person who decides whether you go to jail or not is a federal judge Who collects money from the federal government? The federal government gets its money from the IRS. Whose side do you think they're going to be on? So you're spinning your wheels. You're going to end up in frustration. And that's where my client had that realization to say, these guys who are selling me on their nonsense program, I always love that too. Hey, buy my program so you don't have to pay taxes. It's like, well, why not just pay taxes and save your money, right? So he kind of was with that whole group. And then at one point, he's like, this is stupid. I'm risking everything. So this is where, this is right here. See this line right here, 960, appointed representative. 2001, he hired this guy from Florida who was an attorney. Paid him $35,000 to be an attorney because he was awesome. And if you see, he filed another one, and then he filed another one. Now, where do I come in? I come in, this is 1031, that's me. That's me coming in here at 1031, kicking this clown off. Because during that 2-year period, what did this guy do? All he did was stonewall the revenue officer. The dumbest thing in the world. Don't stonewall the IRS. All you'll do is infuriate him. Infuriated him so much, a criminal investigation commenced. If he hired, you see here, 2001, 2011, if he hired me here, this case would have been done by the time of 2013. But he handled some clown who scared him, which he should have been scared, but he was completely incompetent. And it's just really, really disgusting. And he didn't really do everything that needed to be done either. He stonewalled and did nothing. I think all he was good at was depositing a check. So here I come in, and now additional account pending. Okay, so this is going on. So I'm looking for something that's going to tell me that criminal charges are pending, right? Now where do we see that? Nothing really. We have penalty for fraud. Okay, that's not good. But that comes in after the fact because he actually was just about to, he was actually in prison at this time when that happened. So this is my point. You actually will never see anything on an account transcript that tells you you are under criminal investigation. It goes completely different. There are some things to look for, some tells. The penalty for fraud, well, that's a big one that will tell you, but usually that's after the fact, right? Really, the things that are going to tell you that you might be subject to criminal investigation is have you really been sending stupid letters to the IRS saying you don't have any authority to tax me, and just sort of bombarding them again and again, and you've been doing this for years. Look, the guys who go to prison for these tax schemes, it's not for a year. They go because they've been doing it for 10, 15 years. The IRS waits until you're big enough, then drops the hammer. They give you enough rope, really more than enough rope, to hang yourself with. So I think this is a really good one. Now, for some reason, I think when he was in court, he got pissed off and filed a tax court petition. That was him. It didn't do anything, and I think I told him to withdraw it because we actually got a great solution for him. We put him in currently non-collectible status, and actually, this is where it is. This is where it is. Right here, we got him in the currently non-collectible. Okay, so currently non-collectible is, hey, the guy's in jail. When he gets out, he's really not going to have any money. So let's put him in currently non-collectible. Now, why didn't I file an offer in compromise? Okay, great reason why. Even though by the numbers, he would qualify for an offer in compromise and settle, because this is, again, just 1 year. His about $2 million in tax debts and penalties, he could settle it by the numbers for $100, really. However, the problem is his criminal charges. The IRS has the discretion to deny an offer in compromise for somebody they don't like. A great way for them not to like you is to do something like this and be a tax avoider. Also, bankruptcy is not going to work for him. There's 2 different reasons for it. One is he was late on his return and there were substitute filed returns. Maybe in some jurisdictions there's a way out of that, not in the Second Circuit where we are. The other reason is that the debt sort of came out by fraud, and that's going to frustrate you from getting rid of it in bankruptcy. So really, currently non-collectible is the best solution for this guy, for my client here. And he's a great guy. He really is. And I just think, when you read the newspaper article or the press release where they're they're, making taxpayers, out to be the worst people. Who likes paying this much in taxes? And when you feel the IRS is invading you, it really is offensive to you, and it's offensive to common sense. And somebody tells you something you want to hear, you do a little bit more research on it, and of course the echo chamber is telling you, oh yeah, it's true, you don't have to pay your taxes, and you're led down this road. And then the IRS compounds the issue, because why couldn't they just tell you, hey, we noticed you're trying this tax evader bullshit, it's not going to work, and if they let you a year after you do that, oh, okay, I guess you guys are on top of things, I'll make sure I pay my taxes. It would, nobody would really do this. But they let you go and go and go until you dig yourself out of a deep hole. Now, my client is going to get out of this hole. He's in currently non-collectible, and we just want to look at, there's a few things. The substitute file return. Here's the date, 2/16/15. Let me look at the assessment where we're looking at that. And the assessment here is a 5/18/2005. So that's really, and the penalties associated on the same date. So that's really when the clock started running. There's nothing here that told it. Being in prison does not stop the statute of limitations, I guess. Finally, a tax court petition does. So that's why we're like, no, man, you want to get rid of that. That's not going to help you. That's actually because you actually have the best thing possible right now. There's no sense going to tax court. Okay. Now we're going to look at transcripts to see when you're being audited and how to know if the IRS can levy you. I would say both things are common. We have clients who've come and we're telling them our investigation, okay, you were audited this year. They're like, no, I wasn't. And we're saying, yes, you were. Come to find out somebody was keeping the audit from them. And the same thing with levy notices, that especially if you're married or if you have a business partner that's trying to hide something from you, or an employee, maybe you're not getting all the notices. And this is why we think, doing an investigation is always really important to know exactly what's going on. And I would say now with a lot of the IRS scam callers who are calling, hey, you owe us money. And our clients who have the clients who we do this for, they're always happy to know, like, no, I actually know exactly how much I owe the IRS right now. It's right in front of me with my total tax diagnosis report. So here we go. Here's the transcript we have to show what an audit looks like and a final notice of intent to levy. I'll explain what that means in a little bit as we go. Tax year 2005. And, this person name. Nice. Not a bad chunk of change there. And I would say that's a lot of people, I think a big misconception about the rich is that people make $800,000. This person's going to make $800,000 year after year after year. Look, he had a few good years, but it doesn't stay like that. And that's really how a lot of tax problems come. You're working your butt off, not making any money, then boom, you're hit with massive success. Well, now you think, okay, the only way is up, right? It's like, because that's sort of as far as you know. You work your butt off and money lasts forever. So you go crazy with spending. And you're like, well, I'll just expand even more. And I think that's really the biggest cause of tax problems. Once you have that success, you overexpand, or your expansion really isn't right. You didn't have the right employees. You didn't have the right framework. You overestimated what the market demand was. So you overextend yourself, and the market doesn't do what you want to do, or maybe an employee steals money from you, or maybe there's a lawsuit, maybe there's a divorce. Now your income goes way down, yet you're stuck with the expenses, and the thing that doesn't get paid is the taxes. And that's the way, a lot of these big tax bills happen time and time again. And there's not a lot of understanding by the public about this. They just think it's rich people getting away with murder. And I would say I represent, sort of everybody, from people who make no money to people who make millions of dollars. And it's funny because no one would identify as rich regardless of how much you make, because when you realize there's really no guarantees in all of these things. There's no guarantees because most people who are making a lot of money, they're out there hustling their butt and they're risking everything. And they know, if I'm not doing this, there's not a disability policy that's going to compensate me nearly for what this is. And so that's sort of where, I do take offense when people sort of just classify people as rich. And I would say, rich is, my definition of rich is you could be sitting on your butt and money is coming in so quick you can't spend it quick enough. And it's going to continue no matter what you do. So if that's not you, you're not rich. You're just like the rest of us. You got to work, you got to hustle, and you have the same fear as everybody else. So here we go. We got some basic information. And so let's go and see where he is being audited now. So look, he files a tax return, withholding, refund issued. He got it refund. Hey, this year's all set. Hey, no problems, right? It's like, uh-oh, examination of tax return starts. And here comes the additional tax. And here comes the additional tax. Whoa, $223,000 and another penalty and another penalty. Oh man, this is bad. Okay. Now after that is assessed, right? We see some notices. This CP 22. Hey, you got on a paid bill. You better be paying us. And then they send a collection due process notice of intent to levy issued. As you can see, they issue, here it is. They put it 4 times. Like, hey, one time would have worked, right? And here, nearly right after they file a lien, right? Place of asset. So, and now here's another. Now here it comes back. They filed it, sent a certified mail. Client never picked it up, or usually what happens is you're not home because you're working. That's why you have a tax debt, because you're working your butt off. And they send these notices to you certified mail, so you have that pink slip. Now you got to go to the post office. So most people are like, oh, whatever, I'm not going to get it. If I don't know what it is, it can't hurt me, right? No, it doesn't quite work like that. And now we have a lien placed on assets right here. And now he was placed in currently non-collectible status. Not so bad. Now an offer in compromise was filed, and they denied it. But I don't think. See, this is actually not true. He filed an offer in compromise. I looked at it and I said, this doesn't really stand much of a chance. I don't like it at all. Let's withdraw it. So actually, that's what we do. We want to withdraw an offer in compromise when we just fail. And the reason why is because if you file an offer in compromise later, you just look a lot better to the IRS as opposed to someone who had one denied and filed another one denied. I was looking for a transcript for one old client, and it's way deep in storage. I couldn't get it. But he filed offer in compromise denied, offer in compromise denied, offer in compromise denied, to a point where his 2000 year tax debt that he owed in 2010, he only ran about 9 months off the clock, so that it was gonna go on till 2020 because he just didn't know what he was doing. He was also a CPA, so there's some problems with that. Here we filed an instant spouse claim. That was successful. That was pretty awesome. So we got it off of his ex-wife, and that was incredibly helpful to him. That was a really good win. So that's where they're splitting off this. That's where they're splitting off this. Now right here, this is examination of tax return. This is where we went and filed an audit reconsideration to lower the debt. And then we ended up reaching an agreement where we're like, okay, the debt's going to go, but they weren't going to go after some of his assets and basically end collection. So it ended up being a really great way to negotiate something that we were looking for. And it doesn't show up in the transcript here, okay? And this is something I think important to see. If I go back up here, that you can see right here, okay, the IRS can levy you at any time here, right? You see this, up here? Okay, after they get this, 1/29/2009, 100% leviable, right? They can do it. They put them in currently non-collectible, okay? But in order to say, hey, we're going to start collecting you, they don't have to do too much except issue this one notice, CP 71C. Once they do that, shoot, we got to do something. That's why this offer in compromise was filed by his previous counsel, because we got to do something, because I could see the question. You're like, well, why'd you even do that if you're currently non-collectible? Because they'll kick you out because he makes a decent amount of money. All right, what are we getting to next? Misapplied money, and I want to show you an example of something that's not going to show up. So this is just pretty basic here. This is not as complicated as interested. So here we go. This is a 2014 1040, right? We're looking for a number here, 2014. And just some money kicking around. Tax return filed, right there. That's the amount due. And is it late? Can we tell if this tax return is late? I think it is. I think this tax return is late. Why do I say that? Where's the extension filed? Because if there was an extension filed, it would be filed on a date, but it would relate back to that extension. Yeah, and guess what? I'm right. Because here's the penalty for late payment of tax, $104 for being late. So now here it is. So here's a payment in, and this is just them. I don't know. The IRS just does weird things here. Remove estimated tax payment. Removed estimated tax payment. Payment. These payments didn't really come in. It was just to the client actually didn't. When you see a negative, that means you paid them money somewhere. The money came in somewhere. The client actually didn't pay them money. They're just sort of coding this as their way to say, oh, we didn't mean to put this estimated payment in. This estimated payment in. So when you see that, you'll come across a lot of confusing stuff like this. Now, if I could just plug our own total tax diagnosis at this point, we give you a report where it's just pretty easy to follow, where you don't have to do all of this. Because, for each year, right, this is something you have to do for every account transcript. So it can get a little crazy. But if you're, maybe if you just have 1 or 2 years, and if it's pretty simple, maybe you don't need a total tax diagnosis. But if you have a bunch, it might be really worth your while. By the way, what you've paid to get this applies to your total tax diagnosis. If you so choose, just shoot us an email at ttd@irsmedic.com. Okay, so let's talk about first-time penalty abatement. Oh, this is exciting stuff. Oh, this is such a fun one here. All right. I guess I'm geeking out a little bit too much on this one. So first-time penalty abatement, this is a fun one. So here it is. Taxpayer, December 31st, 2005, 1040. Okay. Ooh, look at this. Look at this. Adjusted gross income, 675. Nice. Not a bad year, right? And so the first-time penalty abatement works like this. Okay. It's something that is part of the Irish Fresh Start program. That's actually good. And essentially, what it requires is that you're allowed to abate your first mistake, basically, that occurred. Usually, everybody has a first mistake, right? You kind of have to, because you can't really get a second mistake if you had a first mistake. So at some point in time, there has to be a first mistake. So it's just finding that first mistake. And in this case, it's wonderful for this client. This was the first mistake in a series of other mistakes. So here we go. Tax return filed 3/9/17, and that was 6 months late. Yes, there was an extension, but the due date was 10/15/2006. We could see here 3/19/2007. The date is, here's their balance they owe, $93,135. Okay. W-2 withholding here. This was timely. The IRS claims with coming in, it's $18,102, and then they paid $75,015 with the return, which my calculations was basically the balance of what that return would have showed, right? But what happened? Well, how bad were these late filing penalties? Pretty bad. $18,225.79 for basically being, 6 months late filing? Was that what it was? 6 months late filing, and your payment is a year late, because really that payment was due December 31st, 2005. So he was a year late on payment, and 6 months late on your return equals $18,000. Right now, I say some of you might be thinking, well, look, I didn't make $674,000 this year, so the penalties for me can't be that bad. It's based on your underpayment. That's what it's based on. So his underpayment was only $75,000 of this. Now, to get so even though he had this withholding, and even though he's so close, these penalties are crazy. But look what happens. Okay, well, now look what happens. These all come in. Here's other payments he made. They took a refund from him, and then they levied him, right? That was pretty bad. But guess what happened? The first-time penalty abatement took this out. So what went away? This $10,000 penalty went away. This $3,000 penalty went away. And then you see this interest charged for late payment? Part of that went away. And the reason why I'm saying part of that is because there's penalties on this interest. Or there's interest on the penalties. You remove the penalties, you remove that interest. Can't get rid of interest on the taxes owed, but you can get rid of that. So, I mean, a significant savings with first-time penalty abatement. These we love. So for you, and I think in a while you're going to see A lot of times the best solutions for people is getting into some sort of installment agreement, streamlined installment agreement, and it gets a lot more manageable when you get, penalty savings of $10,000 or something like that. It gets a lot better, doesn't it? Okay, so now this is another great one. Chapter 7 bankruptcy. Chapter 7 bankruptcy can work to discharge certain personal income tax debts. I've been called a liar or fraud for saying that before, but trust me, it's true. Many people don't know that. And again, you have a tax resolution industry that doesn't want you to know that, because if you file bankruptcy and it works, there's nothing in it for them. No, I don't file bankruptcy myself. We help out attorneys that do for their clients, and we'll certainly direct our clients around the U.S. to an attorney who can help them out. We just like helping people. So if bankruptcy is the way to go, especially if you were thinking about filing bankruptcy for other reasons, you want to make sure you time it right so you can get rid of tax too, because that's nice when you can, sometimes you tell people, hey, just wait 3 months and you'll see why, and you get rid of your tax debt too. And so, hey, that's pretty good. It's sort of like you were already filing bankruptcy, you were already going to ding your credit. Now you have the benefit of getting rid of your tax debt. Okay, so here we have a 2013 tax debt, and here's the amount owed, $40,508. All right, now here's a tax return filed. Okay, that's what I want to see. You want to see a tax return filed, though. It's late. That's not so bad, though. There's no extension. Okay, so for the bankruptcy rules, what does this mean? The date the tax return was originally due, so this is critical to know when you can file bankruptcy, was April 15th, 2014. I think, and I don't know if that was one of the dates, it was April 16th or 17th, so you got to check that. Sometimes it's a little delayed because of the weekend and holidays. So you take that date it was originally due, plus 3 years, so just go to April 16th, 2017. All things, nothing stopping that bankruptcy time being told. And this is really why you want to have a bankruptcy attorney double check and get this right, because the stakes are huge. If you miss it, oof, it's terrible. April 16th, 2017, use that bankruptcy card. It's gone. You could possibly discharge this then. Now, what would happen if we saw a tax return extension filed? Okay. Well, that would make the tax return due October 15th, 2014. So we add our 3 years to there. So we would know we would have to say, okay, October 16th, 2017 would be the date to start thinking that you could be filing bankruptcy. Okay, and here we have some blocks as this is going on here. I just want to show some of these. They're blocked from automated levy program, and this is something I think really critical to understand. Just because you have an agreement with the IRS, even if it's someone at the IRS, automated collections, just because you sent in a direct debit installment agreement doesn't mean it's actually going to happen. You have to stay on them to make sure that they do what they say we're going to do. That's something that we do for our clients. We stay on for 6 months. Until it happens, and that way we can verify. Or actually, we stay on for 6 months after it happens, is what I meant to say, because we want to make sure they don't back it off too. So after 6 months, you're pretty much safe. But we don't stop until we actually see it pop up in the transcripts. So we're reviewing these a lot every day to make sure exactly what the IRS said was going to happen happened. And it just is way too common when something doesn't get coded right. And when the IRS can levy you at will, but then they're not supposed to, do you see how important it is to code that correctly, that they can continue? I mean, mistakes happen. The IRS will levy when they have no right to. Mistakes happen all the time. So you've got to be on top of it. So here's some things. The collection due process notice of intent to levy. This is what springs our collection due process nights when they issue that final notice of intent to levy. And this is where they file the lien. Here it is. We've received the process timely. This right here stops the collection period from running, and it also likely stops the bankruptcy card. However, we know we still have it. So you know what? Because we have this appeal coming up. Whatever we say, if we say, hey, look, we want an offer in compromise for this amount, we want a payment agreement for this amount, the appeals officer says, no, we want this amount, Well, we could come back to them with some real data that they can't refute. Well, look, on this date, each month, the maximum you can get from this client is this. It's going to be this much until they can file bankruptcy. We'll offer you more than what you'll get with that. Otherwise, we'll file bankruptcy. And it's sort of an advanced negotiation tactic. I don't recommend it for the beginner because it has to be handled a little nicely. You don't want to be playing too much hardball, but let them see the light a little bit. And it works. A lot of them say, hey, you know what? You gave me a reason. I can rule in your favor now because obviously it's in the government's best interest to collect more money than less. Okay, so we're getting close to the end here. I hope you're excited, still just as excited as I am about this because it is just so awesome. So part 8, what wage and income transcripts look like, and these are good for filing old returns and probably necessary. People are sort of like, oh, I lost my W-2s and 1099s. How can I ever get my tax returns done? Well, this is how you request these, wage and income transcripts. You get them, and then it's going to give you, a whole bunch of stuff here about things and where these things all go in your return. By the way, the IRS does have this information, and I would say this. We're usually not just... Where we used to be in 2006 was that we would be filing a lot of returns that the IRS did not file a substitute file return for. Now we tend to do a lot of it because the IRS has all this information right here. That's where we got it from, right? So they're able to run this through their automated underreporting software, and that's the thing that's going to shoot you out that substitute file return. So they're going to give you a bill. Now the thing is, they're not going to do any favors for you. They're not going to figure out what your deductions are. They're just going to sort of put this in and assume the worst possible case. However, when you're trying to do your return, you need to know this so that you can correct the return to amend it, send it in to lower that bill. I hope, I think when some people, think that the IRS's word is the final word, and I would say that's not the case. It's never the final word. The tax code is so complicated, is so punitive, is so overreaching. That's the bad part. The good part is that there's usually one more move you have to make. Sometimes, it's rare where we say, okay, that's it. We have tried everything. This is what we're stuck with. But you keep on looking for something. You find something that you could live with. So again, we're just going through mortgage interest statements. You need that, right? Mortgage interest. Your 1099 dividends, any dividends you got. So this is a pretty beefy one here. And I would just say the issue, now here's the issue, is that what we don't have is state withholding. And that varies state by state. If the states have it, a lot of them now do keep it. So if you file a return and don't have any withholding, or you estimate it, the state will correct you on it. But every state, it's based on your federal AGI. So you're basically there. Now let's look at a record of account, transcript of your tax return. Excuse me there. A lot of people, and this is something that I see a lot of, sort of firms trying to make themselves be all this. They'll say, we'll get a freedom of request information on your account to see what the IRS is doing to you. And I would say there's certain situations where we've done that. In cases where we think that something went totally wrong and maybe there was an IRS employee doing something wrong, we'll do that. But, I would say there's out of the thousands of people that have come through our office, about 7 FOIA requests, that's what we call it, we've done. So really you get most of this information for here. It's much quicker. Your FOIA will cost you a little bit of money, not a lot. It's going to take you months, and there's back and forth and redacted stuff. So you really only want to need it. You only want it when you need it. Because here, if you hire us, we can get it instantaneously. And in this case, you're talking about a couple of weeks to get it, as opposed to a year. Don't you want to be done with this issue in a year, right? You don't want to be waiting just for answers. So get your tax return transcript. So here it is. It's not your tax return, but it's showing what was put in each box. This is a helpful thing, isn't it? Let's just say that you were divorced or something and your spouse isn't giving you the tax returns. They're playing hide the ball. Like, well, here it is. Don't worry about it, buddy. I got it. So this is a really helpful thing. So it goes over everything that's filled out in every form, everything that's here. So incredibly helpful. So I think that's going to finish this part. Now, your appendix, because if we go through these transcripts, we're going to see all these codes and notice codes, right? all over here. If we go back to your account transcripts, we see all these 159, 60, 400, right? And sometimes you'll come up in something weird. So look to your appendix to find something that's really not making sense to you. And so that concludes this. So now, with this information, right? I mean, what do you know right now? You should really be able to know so much about what's going on with your problem. And I think you could see that maybe somebody, if you call someone to help you, you'll see if they're trying to prey on your ignorance or validate your knowledge. You know, so that's really what we hope you put you in a place to do. We're going to do another part to this. Okay. It's going to be pretty good. We're going to go how to use this information. I have to show you how to, I'm going to show you how to call or contact for first-time penalty abatement. I promised you that. So that's going to be the first thing we do because a lot of people, that's going to help you out. Then we're going to talk about, because this really helps out from our experience of doing this. It's like 50% of people, it's getting into that streamlined installment agreement, which is also nice because if you have that federal tax lien against you, there's situations where that just automatically comes off. You don't have to do much. So that's really nice. And that'll bump your credit up 100 points. Who can't benefit with that? And then we'll also talk a little bit more about offers and compromise, and then other forms of installment agreements. And then I might show you a little bit more about what you get with the total tax diagnosis, just to see how it could help you figure out a little bit better a way what your next move is. So, hey, this is Anthony Parent. Thanks for your purchase. And really, if you're not satisfied, I want to know. Please, we'll refund your money 100%. Either way, no matter what, if you're satisfied, not satisfied, I want to know how we can improve this. Whether probably one of the things is probably for me to slow down a little bit. I am on the East Coast. That might be one thing, or larger things. If you think I'm missing something. Now, this only does cover individual taxes. You can do many of these things for payroll taxes. A lot of the things, there are analogies to that. I could probably add that in the future. I'm pretty sure I will. So that's it for this. Thank you very much.